Okay, so we are back with another live stream for Tuesday night, September 18th, 2018. Before I get started on this show, which is going to be focusing mostly on conflicting comments coming out from current and former or recent members of the Federal Reserve and how divergent and conflicting they are, I have to do this stupid disclaimer. So anything said on here is not financial advice. It's for information and educational purposes only. I'm not a financial advisor. Do your own due diligence. And if you have a undergraduate business degree, a master's degree in accounting, and you are a degenerate gambler, and you put over $100,000 of your savings into mining stocks already before you met me, and then you have hundreds of percent in profits, and then you blame me afterwards for not hedging your positions or taking profits off the table more than 6 years ago, and then you go and report me to the Virginia State Securities investigators, then you're an asshole and a bad person. And you may or may not have an addiction to Colombian hookers. Okay, well, I think I've done the stupid disclaimer. Let me move on to today's live stream comments. So, in the last week or so, there's been something that's really caught my attention. Not only do you have the former IMF chief economist talking about how the Federal Reserve should start acting like the Bank of Japan now, and during the next global financial crisis start buying, individual stocks and exchange-traded funds like the Bank of Japan, because I've talked about this general theme ad nauseum now for years, that the economic and political elites, the governments, the central banks are going to change the rules. But in the last week, we have even more craziness. So, for those of you who have not been paying attention in the last week or so, we have had Janet Yellen come out with comments talking about how basically the Federal Reserve needs to get back, instead of these rate hikes, the Federal Reserve needs to get back to financial repression, manipulating interest rates lower for longer. The interest rates are already too high, manipulating them lower, and especially if there's another crash or credit crisis or whatever, anything similar or worse to 2008, they need to create more asset bubbles and credit bubbles. She said this. Okay. Now, the conflicting part, and this is why I have this really cool economic cartoon up there, and this is starting to get confusing to some people, and, I think it's a legitimate question to ask people in the Federal Reserve, because there are hawks and there are doves in the Federal Reserve, but these things are so polar opposite. You have Lael Brainard, who is a Hillary Clinton supporter, a hardcore Democrat, rich economic and political elite. She's on the Federal Reserve Board of Governors, and she also recently gave a speech this week, in the last week or so, and what she said totally conflicted what Janet Yellen said. She said that the Federal Reserve, even if the yield curve goes inverted, and the yield curve right now is flattening, and the 10-year yield on the yield on the 10-year U.S. Treasury is back up to 3.05% today, which is the highest it's been since May of this year. But Lael Brainard said, even if the yield curve goes inverted, the Fed is going to continue hiking rates. Now, this is very, very weird, because even the Keynesian academics know that an inverted yield curve means recession or depression. There's tons of mainstream academic economist studies talking about an inverted yield curve. In fact, there's pretty much one of the very few things that a lot of all the different economic schools agree on is that an inverted yield curve is normally bad for markets and normally bad for the global economy. Okay? And here is Lael Brainard talking about, if there's an inverted yield curve, we're going to keep hiking rates. Very, very interesting. So I'll be reading your comments later. I'll be reading your comments later in the show, answering them live. If you do give me a super chat tip, I'm more likely to answer your questions. Again, not financial advice, because I don't want the suits with badges coming again. I'm really fed up with that. None of the 30 or so plus lawyers were going to handle my case. It was going to be a nightmare. It was going to make my life even worse than it already currently is. But I want to thank my Patreon contributors who stepped up on some of my past rants in the podcast, and there was a good amount of one-time donations that came in after a couple of my rants, and there was also some Patreon contributors that either increased their donations or new ones, and they allowed me to buy this really nice, new, and comfy Secret Labs Titan desk chair. So I put that money from my Patreon this past month towards the Secret Labs Titan desk chair. So instead of the squeaky sounds, I actually feel good and my back feels good, so I can do these live streams and my other content in style. I did do interviews for you guys at the end of last week with Zencastr. My audio quality, the sound quality itself, Zencastr is really good. Unfortunately, my audio editor, who has over 20 years experience doing audio editing, tells me that there's big problems with the two audio channels, the two wave channels that were recorded, syncing them up. So Zencastr's post-production software. I interviewed Gordon T. Long. That was an excellent interview, over an hour. And also Victor Sperandio, Trader Vic. He has some really good articles that came out, one in July and then one, I think, in February. He thought initially the stock market may have topped in February and that volatility was going to start spiking again. And then he changed his views in the last couple months. So he thinks for the U.S. in the short term, deficits do not matter, and that emerging markets and Europe are potentially going to go through, and maybe even Japan are going to go through hyperinflation first. But those are great interviews. We are working on trying to clean up the audio and get you those. I hope I do not have to redo the interviews. We are also speaking with Zencastr tech support right now to try to get these issues resolved. So none of the problems that happened last week on the two interviews with Zencastr, I paid the extra money to get the better audio recording quality software. I can't use Skype anymore. It doesn't even recognize my microphone. The new upgrades on Skype, and I'm using air quotes. Yes, it has end-to-end encryption on Skype, but it basically just uses the speakerphone on my laptop. I checked into settings and it totally blocked my microphone out, even though it said it was registered when I did test calls. It didn't even register my microphone. So the new Skype, I think, is totally BS. Microsoft sucks. Microsoft also almost crashed my laptop too a bunch of times. Okay, so yeah, the Fed is just, there's tons of conflicting evidence now. This is, to a certain extent, this happens with the Federal Reserve. So there's always hawks, there's always doves, and then they take a vote, and then normally a lot of people get ruled out. But it's very interesting how divergent the comments are from Lael Brainard, who's in the Fed, listening to Jerome J. Powell. And I think Jerome J. Powell will probably want one more interest rate hike before the end of the year, but we'll see. Normally they'll do one more hike, but we'll see. It'll either be September coming up or maybe December, because the Fed has a history of doing December hikes. But there's a lot of experts I've interviewed lately, and they tend to think that the Fed may be done. So we'll have to see, though. But you know, the 10-year yield spiking, very, very interesting. And I think the 10-year, this is obviously, I don't have any evidence of this. Maybe we'll see some stories leak out about this. But I think the 10-year yield spiking could be one of the China sovereign wealth funds, and they have massive amounts of treasuries, at least they used to. It could be them dumping more treasuries in retaliation to some of these additional tariffs that President Trump is talking about. And, you know, this trade war, it's a lot of its rhetoric, a lot of its talk so far. There has been, I think, some increases in the tariffs, only 10%, I think, in the actual tariffs. There hasn't been the 25% tariffs yet, but Trump is talking about, you know, putting tariffs on $200 billion in goods, but I think it's 10% tariffs. But, you know, Jack Ma from Alibaba, and, you know, that may be a red flag that he's leaving Alibaba too, because Alibaba was pumped like crazy too. Christopher Irons at Quote the Raven did he showed some very interesting things about the Alibaba IPO and how heavily pumped that IPO was. But Jack Ma is leaving Alibaba soon, so that could be the top in Alibaba, and it may be grossly overvalued, could be accounting fraud there. But Jack Ma said that this U.S. versus China trade war could go on for 20 years. Just crazy thoughts. He said that recently. Okay, so if I do take a break, I will be doing one of three things. I'll either be having some water, I'll either be checking my notes for the points I wanted to talk to you guys about, or I'll be reading the live stream comments and questions. Okay, so I'm going to take a water break here real quick. Silver Wolf 45, love your work, keep up the good fight. Thank you, Silver Wolf, I appreciate it. Aaron Hawley, Fed needs to raise rates and cut its balance sheet so that they can cut rates and increase its balance sheet on the next recession. Problem is raising rates and cutting will cause the next recession. Well, yeah, we've been saying many of the guests I've interviewed, Aaron, for the last number of years, and myself included, have thinking that the Fed did not have much wiggle room. They brought themselves into this trap. Now, if you go to the St. Louis Fed's website, with quantitative tightening, which I think is a stupid name, the Federal Reserve has sold off around a little over $300 billion, I believe, in assets, and I'm using air quotes because we don't know exactly all the junk that they bought, and that's only their publicly stated balance sheet. It's not counting the currency swaps and all the other stuff that I've highlighted, the central bank to central bank currency swaps, which are still going on. So the Fed has sold off around $300 billion, but you have to look at it in perspective, though. So $300 billion in asset sales relative to a $4.5 trillion balance sheet is not a massive amount. It's not a massive amount. So we'll see if the trend continues. We'll see if Jerome J. Powell continues on the rate hikes. But it is really, really unusual, though, because we know that the Keynesian academics and also the people at the Fed are well aware of the academic studies, lots of empirical studies on this, that what an inverted yield curve does and how bad that is normally for both markets and for the global and for the US economy and the global economy. And for Lael Brainard to talk about continuing to raise rates in the face of an already inverted yield curve, if that does happen, that's a red flag to me. Maybe the Fed really is actually worried about inflation. We do see there is a good amount of evidence, even in the Federal Reserve's own data and the government's own economic data, that inflation is starting to really, really pick up. David Rosenberg, who I've highlighted in the past, if you want to follow him on Twitter, he's been looking through the Fed data, and the Fed data from 2 or 3 years ago, their own inflation data said that inflation was low, but over the last 2 or 3 years, it's really started to rip. So from 3 years ago up until now, it's increased a lot. I think it went from 0.8% using the Fed's inflation data about 3 years ago. It's almost to 3%. So using the government's own data, there's a big increase in inflation. And we're getting confirmation of this from a lot of conference calls from a lot of publicly traded companies that their costs are rising. But a lot of these companies think that they will be able to pass the cost increase, their input cost increase, onto customers. Some of these companies, though, are blaming the Trump tariffs on it, but hopefully you'll hear this when the Gordon T. Long interview is released. He thinks that some of these companies are just blaming the Trump tariffs as an excuse for not managing their margins and their costs correctly. So he thinks that I've gone over this in the past, that like a lot of these publicly traded companies, to beat earnings and play the numbers games, they whatever popular excuse of the day there is, they adhere to it. They come up with like a BS excuse. And so he thinks that the new BS excuse that a lot of these publicly traded companies are going to use to stock analysts to either lower the revenue guidance or earnings guidance so they could beat it, or if they actually miss the numbers for revenues or earnings so the stock price doesn't crash, they're going to use the Trump tariffs as an excuse for why they didn't beat it, even if they have nothing to do with the Trump tariffs. Even if their numbers missing have nothing whatsoever to do with the Trump tariffs. Wendell Morse, yes, inflation is much higher than 2%. If you use John Williams' Shadow Stats numbers, it's much higher than that. There's also another one that's not as well known, and unfortunately the Democrats have attacked him. It's Ed Batowski, and he has the Chapwood Inflation Index, and he surveys, I think, a couple times a year about 500 different consumer items from major cities. And he's been saying for years now, if you can go on the Chapwood Inflation Index website, it's free. And he's been saying that in all the major U.S. cities that there's been 8 to 13% inflation on all the major consumer items for, I don't know, the last like 7 or 8 years now. So, I mean, I've been saying for a long time that there's stagflation, and the government's been lying about it, so that would just confirm things. But it does look, especially in the conference calls and the companies that are saying their costs are rising, admitting it publicly, that there is increasing stagflation. Whether the government numbers will admit this, whether the talking heads from the government at the Fed or the other government agencies will admit this or not, that inflation is increasing. Before I answer more of your listener questions, let me check my notes here. Oh, so another point I wanted to bring up, and I brought this up in the interviews that were recorded at the end of last week, and I didn't have a chance to discuss this publicly yet, is that the U.S. stock market's in this, artificial bull market, because I don't think this bull market in the U.S. stocks, in the Dow, in the S&P 500, and the NASDAQ are being driven by fundamentals, even though there's talking heads going on CNBC and claiming that, there's earnings growth and the companies are so healthy and all this. It's not really. A lot of the publicly traded companies don't really have cash. They're using financial engineering and accounting fraud and share buybacks with artificially cheap debt to move the share price higher. But, a lot of the stock markets in most of the major economies, whether that's China, France, Germany, Japan, they are below now their 50-day and 200-day moving averages. So this is a red flag. This is not a global bull market that we're in. This is a U.S.-centric stock bull market. And what that signals to me also, with the other stock markets below their 50-day and 200-day moving averages, is that a lot of capital, money managers or people with savings in other countries are getting their money out of those other countries and bringing it here to the U.S. And, as I've tried to, I study history. So from financial history perspective, this is what happened a couple years before the October 1929 crash. So the Federal Reserve started hiking rates about 6 to 8 months before the October 1929 crash, and tons of flight capital was coming to the United States prior to the October 1929 crash. The last 2 years, there was a blow-off top phase. So we may be going through something similar to that now. Of course, if the other reason that Lael Brainard and Jerome J. Powell raising the interest rates, even if there's an inverted yield curve, could be that, maybe they were co-opted. Well, we know that Lael Brainard's a Democrat. I don't know if Jerome J. Powell is political at all or not. But, some of the people at the Fed are obviously very hardcore Democrat. There's normally not a lot of Republicans there. But they could be saying, we're going to make sure that Trump getting reelected is going to be near impossible. We don't know what's going to happen in the midterms. Probably, if you made me give an educated guess, I don't think the Republicans are going to do too well in the midterms. But we'll see. Maybe I'll be wrong. But I think it's legitimate that the Republicans could lose a lot of seats in the House. Adrian, I think the stock market will keep rising through next year, but markets could crash any day now. Yeah, I'm not relying on any short-term returns. There's a lot of portfolio managers that are pressured with career risk that are managing money now that have to buy stocks. And so that's what has me worried, is that a lot of people that could be long are. There's definitely bubbles in like marijuana stocks and certain technology stocks. We have a bubble economy now. Okay, so checking my notes again. Did you guys see the story that President Trump wanted to print dollars to pay off the national debt? Well, that's not mathematically possible, because when you have digital debt-based fiat currency where commercial banks can loan the money into existence from fractional reserve banking, the debt can really never be paid off. And if you go look at Dr. Chris Martinson's crash course, you'll see when there was a tiny little blip in the drop in credit that caused the 2008 financial crisis. So there's enormous pressure, and even China can't really stop their credit bubble, their credit Ponzi that they're growing now. China was trying to slow it down, but they became a couple months ago. They tried to slow down a little bit, and then they reversed course. Okay, so there's a couple more current event things, and then we'll do some listener Q&A. I don't want to do as long of a show, live stream show as normal. I want to work. I spent about 3 hours, guys. I'll tell you this. I spent about 3 hours pulling PowerPoint slides from the 3 world's largest and lowest cost silver miners and their financial information, showing you guys what the costs are and how even the world's 3 largest and lowest cost primary silver miners are not really doing very well. So I'm gonna do a short video, probably about 20-30 minutes, going in depth on that. And I'm not sure how many more of the short videos I'm going to do, but I'll do this one because I spent over 3 hours on the research work already, and then I'll record the audio and I'll release it to you guys probably by the end of this week. It'll probably be up I didn't record it yet, but I have the slides done. There's about 15 or 20 slides, somewhere in that range, and it'll be done by the end of this weekend. But it is not good for the silver miners. Let's just put it that way. I went there and pulled all the financial information. It is not good for the world's largest and lowest cost primary silver miners. If the silver price goes too much lower, they're in trouble too. Their financials are not as clean as you would think, given what they're claiming their costs are. Okay, so a couple more things before we get to listener Q&A. So we got Project Veritas's video dropping today. with that Rob Karofka. I'm botching his name. The Democrat Socialist of America doing Democrat Socialist of America lobbying on the job, sending out emails and getting paid to do it. Can't get fired by a federal government agency in all these government employee unions. The scary part, and he clearly violated the Hatch Act. The scary part about this, and you would have to have lived around the DC metro area and be open-minded and understand things, talk to a lot of people in these government agencies for a long time, is that a lot of these guys are brazen. They know they can't get fired. And so this change, I want to say that up until a couple decades ago, there was people in DC, a mix of political stuff, political parties, and it wasn't so one-sided. But it really started, in my opinion, it got crazy with Bill Clinton in the White House, because in the Department of Justice and the FBI, they really made sure to put a lot of the Republicans into early retirement. And so they selectively hired people from certain types of law schools, from certain types of Ivy League schools, who only had certain types of political backgrounds, who would be loyal and get promoted and stuff. And so now this is pervasive in all the government agencies. There are tons and tons. It's probably more than 90% that are hardcore Democrat in all the government agencies in Washington, D.C. So, I love the work that James O'Keefe of Project Veritas is doing, and it's great that he's shining light on this. But even if the federal government and President Trump was able to fire 50% of all federal government employees, and by the way, guys, that will never happen. So even if the U.S. collapses, I think the federal government will still hold on to a lot of power. With a lot of regular people, the federal government in the United States may even get more power in the next crisis. I hope I'm wrong about this. But a lot of regular people who do not see the world like you and me, who are listening to this podcast, who are not more open-minded, who are not at least mostly in favor of small government, or mostly libertarian, or mostly free market, or mostly Austrian School of Economics. A lot of regular people who, if their retirement stock accounts or the bond market crashed, or if their home prices fell, would not really complain too much if the IMF chief economist, the policy he prescribed, or Janet Yellen, what they prescribed, and there is massive asset purchases to, in nominal value, move the real estate prices, home prices back up in the U.S., move the bond market back up. The Fed starts directly monetizing debt, even more probably than it's already now with the scheme it has with the large U.S. banks that are primary dealers. And, if the stock market does crash, moving it back up, because the U.S. government needs those capital gains taxes, more and more reliant each year on capital gains taxes from stocks, that I don't think most people, including my own parents, would not complain that the major asset markets were moved back up. They would be happy to pay more taxes, even though in nominal value they're moved back up, because they would rather have high asset prices. It just makes them feel more comfortable about retirement. This is the scary part. And, this is what a lot of governments are getting away with now. A lot of the governments are getting away with basically the exact same thing. China, it's even worse with the social credit score. Hopefully the social credit score does not come to the U.S. I would be screwed already, considering all the YouTube videos and all the comments I have and all the titles of my videos. The social credit score came to the U.S. And the last thing is Donald Trump declassifying these FISA. So it's a good first step. We need to see more. He needs to declassify thousands and thousands of other documents. He needs to let the American people decide for themselves. It may wake up more people from the mainstream media BS narrative. It won't wake up everyone, because there's true believers who love their CNN or love their MSNBC and all the crazy stuff that they say on there. Not that Fox News is that much better, but there's some things on there that are... Tucker Carlson's not bad. But, man, things are getting more polarizing. It's getting real crazy. There was a lady on Twitter yesterday, I think she was from the Young Turks, and she went into that BS, that bullshit narrative again about how socialism has not been tried correctly. And so I had my buddy who escaped from Venezuela, who writes for the Mises Institute, Jose Nino. I had him set her straight. He called her out on Twitter. It was really funny. Adrian FCA2, you miss Bill O'Reilly. Bill O'Reilly would not survive in the Me Too movement. Bill O'Reilly was not really a good person. I don't really like his content. I kind of viewed him as a pompous jerk, and he really didn't know very much, especially about the economy. I believe he just thought, like, well, I own stocks. But I really don't. I didn't watch that show religiously. But yeah, he settled, Fox News and him settled a ton of like sexual harassment, sexual assault allegations. There was a lot of. He was a dirty old pervert, to put it nicely. And there's no way he would have survived the Me Too movement. He would have probably been the first casualty. It was that bad from what I've heard. Okay, so we can get into, I think I've covered everything. I'm checking my notes again. I think we've covered everything. Thanks again to my Patreon account contributors who have stepped up. I have this nice desk chair now, and I'm feeling good. My back's feeling good. It's comfy. It's not squeaking anymore. So we're taking care of one problem at a time. It's baby steps. Wendell Morris, rate hype? What do you mean rate hype? Is that a typo there? Jill. Okay, I think I screwed up your name as well. 2% inflation year over year is designed to destroy wealth. Correct. With the Rule 72, in 36 years, your purchasing power will be cut in half. However, the real inflation rate is not 2%. The real inflation rate is actually more than that. But people see their stocks going up. The general stock market. The stock market, to a certain extent, one of the reasons it does go up, the stock market, to a certain extent, is pricing in some of that monetary inflation. That devaluation of the dollar and some of the other fiat currencies, the U.S. stock market is pricing in some of that. However, and I will add this, the more inflation there is, stocks will begin to underperform the real inflation rate. So right now, stocks may be outperforming the real inflation rate, or at least some stocks are. But as inflation gets worse, because, most of these governments, most of these central banks, most of the politicians in power do not want to allow real deflation, especially for a long period of time. Maybe they'll allow it for 6 to 12 months to get rid of Trump, to limit him to one term, so they can, and also so the Democrats can regain control of both houses of Congress and start implementing more of George Soros's open border, high tax, all the other plans that the Democrats planned before Trump and the Republicans gain control. A little bit, tiny majority in both houses. The Republicans don't really the Republicans don't really agree on a lot. They're corrupt too. But, the Republicans are not really much better than the Democrats, although the Democrats have really no morals, but the Republicans they can't win in a lot of fights because the Democrats use Saul Alinsky rules for radicals playbook tactics, and a lot of the Republicans are not willing to fight back. So, but I do think the Democrats, if they do gain control of both houses, they will at least bring impeachment charges on Trump. Hopefully those get dropped. I don't think the country can really deal with that now. There is radical polarization here. It is getting worse. My God. I need to stay off Twitter. I enjoy the information. I should probably stop tweeting. Not that anyone sees my tweets anyway, because it's shadow banned. I like Twitter because of the information flow, though. It's like a true information flow of the internet, but, sending out tweets is probably a waste of my time at this point. And I have already reduced my time on the dating apps. It's just, it's so ridiculous. Especially around here. Ain't that stripes. Sold off to other central banks. Print, baby, print. Are you talking about the stock market? It's kind of not making a lot of sense. Twister, I completely agree with what you said here. It's a great point. They want us to hustle hard for our money. Exactly. With a certain amount of inflation and taxes, with devalued fiat currency, and it's not just the federal government that has high taxes. If you live in California or Illinois or New York or New Jersey, they are layering on, even here in Virginia, which is supposedly the number 2 business state in the entire country, they are layering on taxes and taxes and taxes across the board. Property taxes are going up. In certain areas where I eat, there's a 10% tax for just getting like a burrito. They're layering on taxes and taxes and taxes. And the average person, their income is not rising. So their standard of living is declining and is becoming tougher and tougher every year or every couple of years just to keep your head above water. Lorraine Weymouth. Hello from the UK, Lorraine. Are you a libertarian in the UK? Do they even have free speech anymore there? They don't, right? I have a couple friends in London. I'm worried about them. I've suggested, one of them has a lot of Twitter followers, and he posts Austrian School of Economics and Mises Institute articles and other libertarian content, and I'm truly worried for him. I think he should move. Wendell Morris, sandstorm in Turkey concerned. I've spoke about this at length. Well, that mine is not going into production until around 2022. And Sandstorm doesn't have the majority interest. Okay, this is not financial advice, just my opinion. I do a lot of research on this company. I interview the CEO every 3 to 4 months. He does a lot of public interviews that ask this exact question. They have a large in-depth video on their website about this. And a lot of institutional and hedge fund investors also email them about this question. There's a lot of people that think that mine in Turkey will be either nationalized or never go into production. I disagree as of right now. So Sandstorm's main partner is one of the largest corporations in Turkey. They are an enormous conglomerate, multi-billion dollar. They are very well politically connected. I believe the CEO is good friends with Erdogan. He might even be related to him. I think at least at the minimum, he's very good friends. If Erdogan is replaced, they will pivot. But this Turkish company owns 70% of the mine. And Turkey actually, and I think a lot of people are overreacting to this, and this is why the Sandstorm Gold stock dropped a lot, even though more than other gold stocks, because of their Turkey exposure, is that a lot of people think that the Turkey mine will never go into production, but this Turkish company owns 70% of the mine. Okay, Sandstorm Gold is a minority interest holder. They only own 30%. They only have a tiny fraction of the capex. So I think that mine will get done, and I think even if Erdogan is replaced, I think that enormous Turkish corporation will pivot and just either hire new lobbyists or cozy up to the next Turkish government. So I don't think that Turkish corporation will get in trouble if there is like a political revolution or something. I think that Turkish corporation also has a lot of synergies that is going to save the mine a lot of costs for money to be built, because that Turkish company owns a power company, so they're going to have cost savings there for power to install the stuff at the mine. There's a lot of other details I could go into, so I'm not worried at the current time, but the market is worried and has overreacted, and I think that mine will get built. And most importantly, Wendell, I think Sandstorm's going to do a lot more deals. But from now until 2022, Sandstorm still has a lot of cash flow coming in. They don't have any debt. They can strategically use debt to add more cash flow. And as I've discussed ad nauseum with the mining industry, a lot of gold and silver miners are in quite a bit of trouble. And so the other larger royalty and streaming companies are doing deals that are beneficial to them in the long term, like Wheaton Precious Metals, Royal Gold, Osisko Gold Royalty, and Franco Nevada. And I expect Sandstorm Gold to continue that. So by the time that Turkish mine is probably ready to come online in 2022, you could have, this is not financial advice, this is educated guess. You could have Sandstorm Gold with over 25, maybe even over 30 assets online generating cash flow, not even counting the mine in Turkey. So if they have 30 other assets online generating cash flow and they're making like $70 or $80 million on the rest of their investments, it's the Turkey investment is not going to be as big of a percentage. And this is why the business model in the long term works, because Sandstorm Gold does not have to take on a bunch of debt like a gold miner or silver miner would and bet the whole company, debt and equity, tons of share dilution on just one mine. And if that mine goes bust, then the miner, look at Primero. Okay, Primero, do you remember that name, Primero Mining? They grossly overpaid for the Black Fox mine in Canada, and I believe they also overpaid for San Dimas, but I know they grossly overpaid for the Black Fox mine in Canada, and they couldn't optimize the mine. They had problems growing production, they had problems replacing reserves, they had problems maintaining margins, and at Primero, to stave off bankruptcy, to delay bankruptcy, they ended up having to sell both of their mines for pennies on the dollar compared to what they paid for them. And so First Majestic Silver and McEwen Mining were able to buy very quality assets producing mines. First Majestic Silver did it with stock dilution, and McEwen Mining did it with cash, and they were able to buy assets for pennies. And I do not anticipate Sandstorm Gold having to do that. But yes, there is geopolitical risk, but the risk is worth the reward for the hot modern mine in Turkey because the mine itself will be one of the lowest cost mines in the world. It is that good. And that's why they took the risk. Their geologists were shocked at how good the grades are, how wide the widths are to mine, how the vein to mine goes right up to the surface. The mine's going to pay back all the debt used to build the mine in under 2 years, which is unheard of normally for a pretty large gold mine with over 200,000 ounces per year of gold production. So that's why they took this risk, because hopefully once the mine is built by 2022, this will have the chance to be one of the lowest cost gold mines in the world. That's why they took the risk. Aaron Hawley, inflation is 2% if you don't include food, energy, housing, education, healthcare, aka 90% of everyone's expenses. Exactly, man. It's true. It's sad, but it's true. It's one of those, truth and jest things. It's one of those truth and jest things. And what's the saying? There was a government, I think it was either Bureau of Labor Statistics or a Federal Reserve employee, and they were giving a speech to local small business owners somewhere. I think it was New York City. And they were talking about the low inflation rate, and someone made a snarky comment from the audience saying, "I can't eat an iPad." You're lying, I can't eat an iPad. So, the data is totally manipulated. They come up with new ways to manipulate it. The the MIT 1,000 price project is not too accurate either. I think it mostly only measures online prices for a lot of electronics, so it's not measuring a bunch of other prices throughout the economy. I think John Williams of Shadow Stats and I think the Chapwood Inflation Index are better inflation measures than the MIT million price project, MIT. But a lot of people cite that one as saying, hey, look, there's no inflation, it's not a big deal. Adrian, you think Trump will win again? Well, it depends. It depends, because if the Democrats win back House, the impeachment charges could bring things. Trump needs to bring transparency to the government. The deep state is really after him here. They're trying to, any way they can. Look at this Kavanaugh stuff, man. From over 35 years ago. I mean, how can anyone remember a high school party from over 35 years ago? They're asking for witnesses to testify. I mean, I can't even remember most of my weekends in college, okay? And then Dianne Feinstein sat on this stuff. There's so many red flags here with this Kavanaugh. If I was Trump and he wanted to play 4D chess or 5D chess and really mess with the Democrats for doing this with the Kavanaugh, and you know what? The woman, if it did happen to her, she should get her chance to speak her truth. But it sounds, I don't know why she didn't bring this up sooner. And it's really weird how Dianne Feinstein didn't release this sooner, because she had the chance to directly speak to Kavanaugh in private meetings and also during the hearing to embarrass him. She had the information, and they held this to the last possible minute. But, it's just crazy. Just remembered my point. So if Trump really wants to play 4D or 5D chess, what he should do now, because the Democrats are going to stall, they want an FBI investigation again, even though I think Kavanaugh went through 6 FBI background checks through all his all the different judge appointments he had. He had full FBI background checks on this too, and then he had additional FBI background checks for his nomination process. That Trump should just pivot to Amy Coney Barrett. Oh my God, the Democrats' heads would explode. I think they really hate her more than anyone else. That Supreme Court, because she's she's a hardworking female lawyer, and she's a good family person. She has, I think, 5 or 6 kids, and she's closer to Scalia. So I think that would make a lot of the Democrats, especially the hardcore feminists, the feminazis, if Trump pivoted and switched his nomination to her, that would make their heads explode. And I don't think she has any dirt on her either. They just have her court opinions, which are so controversial to the feminists, but I don't think Coney Barrett has any dirt on her, really, other than her controversial, when Democrats view it, her court opinions. But I don't think they have any dirt on her that they could use. Okay, I can't read your name. Is it in Russian or Cyrillic? What's the real inflation number? It depends which country you're in. In the U.S., I would say it's between 6 to 10%. If you look at the Chapwood Inflation Index, it is actually higher than that per year depending on which city you're in. So if you're in like the San Francisco, Silicon Valley area, you have above 10% inflation. When you combine like housing and healthcare and food and transportation, California is increasing new gas taxes, and now you can't use straws. You can't use plastic straws, excuse me. Soon, they're transitioning over now to these. They're not bamboo straws. I think they're like recycled paper towel straws. And at the salad place I go to, they switched over here in Northern Virginia to these paper towel straws, and literally in 5 minutes or less, these things are already soggy and you can't suck up any water. So I'm suggesting that they switch to bamboo straws, which are natural, but I don't know how much more money bamboo straws are. But yeah, inflation is very tough to get the accurate numbers, so there's only a general range, I would say, of inflation, but it's at least 6%, and it's been that way for years in the U.S. And even during the 2008 financial crisis, when people were losing their jobs, when asset prices were falling, a lot of prices on a lot of items didn't fall. Okay, I mean, my bills were still going up. In 2008-9, a lot of my bills were still going up. Jessica Lubian, fear not, Twitter still doesn't represent most Americans. I hope you're right. They're sure as heck trying to influence a lot of people with that. A lot of the younger Americans, Jessica, are very into Instagram, Snapchat, Twitter. So for older Americans, you may be right. But for younger Americans, they're hardcore on social media. The younger Americans that can vote now and will be spending money and are the future consumers, they put way too many things on social media. Hardcore oversharing. Way too much info. Argyle, the Constitution is a solution. Exactly. If we had rule of law, if people were following the Constitution, things would be a lot better. But the Constitution has been intentionally subverted and ignored. The Republicans have also ignored the Constitution too. I mean, look at the Patriot Act. Here's the scary thing. Brett Kavanaugh was the young lawyer right out of law school who wrote the Patriot Act, okay? Watch Judge Andrew Napolitano's presentation on this from the Mises Institute from about a month ago at the Mises University. So he gave, 2 months ago. I think it was July. Watch that. So Brett Kavanaugh might be good on some issues like the Second Amendment and other things, following the Constitution on certain things. That would be good. I would be in favor of Kavanaugh on that. But, listen to Rand Paul and the concerns that Rand Paul has about Brett Kavanaugh on his Patriot Act. Very, very concerning. And we could see worse than the Patriot Act. That's the scary part. Black Star 101. Inflation isn't evenly spread out across products. This is 100% correct. 100%. Some companies are able to maintain their margins better than others. Some companies are more efficient. Some people running the companies understand there's going to be inflation and hedge their costs. Some companies can pass their costs on to customers to maintain margins. So some companies will not have the inflation that other companies might, but the consumer, depending upon the things they consume and the things they buy, is going to have to deal with different levels of inflation. I can tell you that my food costs, and I like to eat salads now and grilled chicken, soft tacos, because I'm trying to eat healthier, and also a lot of avocados and guacamole. I can tell you the price of avocados is going up a lot, and just in the last year or two, the price for grilled chicken and grilled chicken soft tacos, those prices have been rising a lot at casual dining restaurants, and they're not covered in the inflation statistics. And one of the places, the price increase on grilled chicken soft tacos in the last 6 months is 30% increase. And another one, it was a 30%, it was like a 33% increase in about a year. And now compared to about 3 or 4 years ago, it's about a 60% increase. Okay, I'm reading through more comments. We're going to wrap this thing up a little bit earlier than usual, but I will stick around for a few more minutes to read more comments. But it is very interesting about the conflicting comments coming out from current and former Fed members. And, comment in the comment section, the live chat here, or once this video is archived in the regular comment section, if you think the Fed is confused about what to do. If you think that Jerome J. Powell is political, if he wants to, stick it on Trump, because candidate Trump, in my opinion, correctly highlighted that the stock market, when he was running, before he won the election, in one of the biggest surprises in U.S. political history, was a big fat bubble. And now he's taking credit for the stock market going up, which I think for him is very dangerous. Because if the stock market does crash, everyone's gonna blame him. It's gonna be nonstop. Every single major newspaper, pretty much, mainstream media will be hammering on this. Even though the Mueller investigation has not found any Russian collusion with Trump, it's nonstop propaganda on a lot of the mainstream media, TV and newspapers, and even NPR, National Propaganda Radio. Adrian FCA2, you could print the debt away, but the dollar would hyperinflate. Well, you'd be putting more debt-based digital debt-based fiat dollars into the existence, and then the foreigners who are holding the dollars would, if you think it's bad now that the Chinese and the Europeans are coming and buying U.S. real estate, it would get even crazier then. So the debt in nominal, it would be kind of like, we could have something like around Argentina, where it could hyperinflate, but a lot of people in Argentina tried to take advantage of the hyperinflation and take out mortgages to buy real estate. But what happened was they made all the mortgages payable in the new currency that was issued. So the people didn't get their debt wiped away for trying to speculate on real estate and take out a mortgage before and during the hyperinflation, and so they didn't get any of those benefits. And then anyone who had in Argentina who had dollars in their Argentinian bank accounts, those were converted without any. They didn't get a say in the matter. Those were automatically converted. Then the dollars were stolen, and then automatically converted then into the new Argentinian peso, which was devalued. So we could have something along those lines. I've tried to stress the point that the people in power, the central banks and the governments, especially in the major economies, can and will routinely change the rules. So you cannot go all in on any one strategy. You have to be diversified. Again, this is not financial advice, just my opinion. You cannot be fully invested in anything. But I think, having some cash in case there is a stock market crash, your dollar, if you hold dollars, a lot of dollars long term, they're going to get devalued. But if you have a lot of dollars and there is a stock market crash, there could be a generational buying opportunity like in 2008. If you had a lot of cash, like my dad and I did when we sold my grandma's all the garbage that my grandma had been lied to and sold by her financial advisors, for high commissions, all the mortgage-backed securities and the bad rates, the stuff that had gone down 90%, we liquidated it for cash, but we took that cash and we bought quality stocks at the bottom when there was blood on the streets in 2008, and some of the stocks went up more than sixfold, some of them went up more than tenfold after 2008. So if you have cash at the right time, it is good. If you hold cash forever, it's bad. So you should have some cash. For optionality, for liquidity purposes, optionality to take advantage of opportunities. Thanks, Adrian. I'm glad you like my show. Hopefully this will result in a couple new Patreon account contributors. Hopefully a couple people will chip in $1 a month. I'm not asking for people to give me $50 per month, although one guy did for a month or two, so thank you. But, if everyone chipped in $1 a month, be good. Be good. It would cover all my increasing costs here for doing the interviews, because my costs are going to have to go up now with Zencastr, and it looks like every single piece of content besides these live streams is going to have to be a lot more edited now because of some of the problems with Zencastr. Although we are in discussions now and emails with Zencastr tech support, going to have to check those after this live stream. Hopefully they will be able to get a solution for me, and I will be able to release the Gordon T. Long interview that I did last week and also the Victor Sperandio interview last week. I do not want to have to redo them and go and apologize to them and tell them, but I think they would do that. I've also emailed Mark Cajotes, and I am working on getting an interview with him in the next couple weeks. But first, I want to get this issue with the Zencastr fixed. So going to hold off on doing any more interviews for the near future until I have the audio problems fixed. So there will be live streams and there will be short videos, but the interviews are on hold until I get the technical problems fixed. I have my audio editor who has over 20 years experience helping me with this, and I'm in discussions with Zencastr tech support as we speak. Ryan, the only way this economy is crashing is that they blame it on a Russia hack, North Korea attack, Iranian attack, some form of economic terrorism that was out of their hands. Hey, Ryan, if I could add to your points there, if you read Jim Rickard's book, I think it was The Road to Ruin. I get the order of the books mixed up, but there's been hacks of stock exchanges here in the U.S., and sometimes the exchange is down for a couple hours, maybe a day or two, and sometimes they lie about it, but there hasn't been a hack that has totally destroyed the exchanges, but there has been stuff that has shut things down for a little while, and they've had to remove some of the maybe some of the flash crashes in some of these stocks. Besides the high frequency trading algorithms going haywire and blowing up, maybe some of those are also hacks from foreign governments or something, but it's not large scale enough to actually do immense damage yet. However, if we do have really powerful artificial intelligence, it may be able to do this on its own, like Ultron or Skynet or one of those. So we are letting the genie out of the bottle with artificial intelligence. It may be able to do one of these things if it wants to. Blackstar 101, the stock market would collapse if they tried to impeach Trump. I don't know, maybe not. It depends if the Exchange Stabilization Fund, all the 5 or 6 different plunge protection teams, the Swiss National Bank, which is a technology hedge fund, wanted to step in, or the other central banks wanted to step in. So there's a bunch of plunge protection teams that could step in and change. Look, man, with Hurricane Florence and some of the other things that should have caused a larger stock market correction, I mean, Hurricane Florence is doing immense damage. It should have caused a little bit larger stock market correction than it did. The stock market just shrugged it off. The stock market doesn't really seem to care about bad news right now. And some of it may be flight capital coming in from other countries still, and some of it may be manipulation. I mean, even the trade war news. The trade war news should be bad for the stock market. It should be bad for earnings for a lot of these large corporations. They're not going to necessarily be able to pass on all these increases in their costs. There may be customers out there who say, you know what, I can't handle this cost increase. I'm going to either cut back on the goods and services I'm buying from this company, or I'm going to stop entirely. So the trade war, the market's not reacting properly to the trade war either. Because in the past, trade wars were not good for stock markets. When we had more functioning markets, which I would argue we don't really have functioning markets. We have interventionist markets, manipulated markets by a bunch of different players. But when the stock markets were less, there's always been manipulation by one party or another. It's just human nature that someone's going to try to manipulate a market and get an extra profit or trade on inside information. It's always part of human nature. But, I'm optimistic that without regulation, that if a company or person tries to cheat, eventually their reputation would get ruined. Someone would figure it out in the long term. But, we just don't have properly functioning markets right now. There's a huge dislocation, in my opinion, between the stock market and reality in the U.S. economy. And the reality is, and I have a pretty large audience now, a lot of my listeners are not doing too well financially. A lot of my listeners, and I've been hearing this for years, are not doing too well financially. So maybe some of them benefited from the Trump tax cuts. They got a couple extra $1,000 or $10,000 increase in their blue collar or white collar job per year. But their other bills are going up. Their cost of living is going up. Their property taxes are going up. So in the whole big picture of things, and you're not hearing this on CNBC or Bloomberg, the talking heads there, and the mainstream financial media, is when you look at the whole picture of things, whether there's Trump tax cuts or not, almost everyone's bills are going up. And really the only people who are doing well are what Richard Cantillon, the Cantillon effect, the people who are in the federal government in D.C. who have like really cushy jobs, can't be fired even if they commit a felony in a lot of cases, Cadillac health insurance plans, people who are running large corporations, and a lot of people on Wall Street. The people who are closest to the money trough, who are closest to that excess money and credit creation, as Cantillon would say. The Cantillon effect is benefiting the people who are able to go and take that cheap, artificially cheap money and credit that is created out of thin air by either commercial banks or central banks and go and buy those assets. Those are the people who are benefiting the most. And then the inflation and the other stuff is trickling down to the rest of us. This is not free markets. This is not capitalism. This is not functioning markets the way they should be. If you're a person on Main Street, you're a small business owner, you have to be a capitalist because there's no bailout coming. You have to cover your ass. You have to protect yourself. Okay? If you're running a large publicly traded company, you could probably, most of these companies are getting away with at least some degree of accounting fraud now. And I doubt anyone's going to go to prison for it. And then I'm trying to educate you guys about this because there's a lot of perception among you, the listeners here, that all short sellers are bad. There is liars and cheats and asshole short sellers and people who are fraudulent. However, there are also good, honest, hardworking short sellers that expose accounting fraud. Jim Chanos, years before anyone else, was warning people to stay the hell away from Enron, that it was a fraud. And you know what? For years, no one cared because the share price was going up. No one cared. He tried to warn people. No one would listen. Harry Marco, this wasn't a publicly traded stock, but if you want to read a great book, it's a thriller. It's a true story too. It's available on Audible audiobook. Harry Markopoulos. Read his book. Read No One Would Listen. It's probably like $4 now on Audible. It's on sale all the time. I read it years ago. Okay. Great book. But he figured out in 10 minutes, the guy's a math genius. Okay. And he worked at a hedge fund in Boston. And his hedge fund bosses told him to replicate Madoff's investment strategy so they could try to market that for more clients. And he ran the math numbers and he determined in 10 minutes from looking at the publicly available documents and the marketing material that Madoff's money management company had that it was a Ponzi scheme and a fraud. He said it was not mathematically possible. The options markets for the option strategy that Madoff was claiming to use to get a 10% guaranteed return in any market condition, there was not the options trading volume available. So he said you could have proven it was a fraud in 10 minutes. He explained this to the people at the SEC. And if you read the book, it's the scary part. He thought the people at the SEC, when the Madoff scandal was breaking, were going to destroy his evidence and have him killed. He was that scared. Because the SEC was more worried about their reputation for not uncovering the fraud than actually doing. And, this is the problem with a lot of these government agencies, not just the SEC. They're hiring certain people with certain resumes who don't have a varied skill set. They're hiring, certain type of people have the hardcore Democrats from the right Ivy League school, from either the right MBA program in Ivy League or the right law school in an Ivy League. And so all the people there are groupthink. And at the SEC, they need people with better accounting background. They need people with more market experience. And they're just not doing that. They're hiring the same group of people. The whistleblower program at the SEC is good. Harry Markopoulos fought for that. I'm not really sure if how many frauds it's exposed, but in theory it should be good. But the whole system is a mess. We do not have, in many cases, functioning markets. We have CNBC and Jim Cramer pumping relentlessly marijuana stocks now. Marijuana. Okay? Some of these marijuana stocks in the last 6 months or 8 months have gone up insane amounts. Some of these technology stocks, small cap ones, have gone up insane amounts. And I don't know if there's really any fundamental justification at all. It's mostly speculation that some big company is going to acquire them. There's not the revenue growth, the earnings growth, the free cash flow is not there. It's kind of like the internet bubble. Ryan, it cannot be the government's fault this time. Oh boy. We don't have time. We don't have time to discuss this completely, but I think the government does deserve a lot of the blame. The government, look, Ryan, there's tons of laws on the books. There's tons of fraud laws on the books. Nothing was enforced. In my last live stream about Lehman Brothers, that what has changed? Nothing has changed. In fact, it's gotten worse. Okay? There was more than 5 government agencies at the local, state, and federal level monitoring banks and mortgage companies. Okay? And none of them cared to bust anyone for the fraud, the mortgage-backed security fraud, for subprime, all the fraudulent stuff that was going on, no one got busted. And so they give the same bullshit excuse that we don't have enough money, we don't have enough resources, we don't have enough time to get everyone. Well, they didn't get anyone. Okay? If they would have gotten a couple people at the top of these companies, a handful maybe, it would have sent enough message that it would have stopped a lot sooner. Okay? So I will say it is the government's fault because the laws are already on the books for fraud and other stuff, and they're not being enforced. Okay? Now, U.S. citizens and a lot of us do deserve some of the blame because a lot of U.S. citizens don't care. They're complacent. As long as they have a job and their retirement account's doing okay and their favorite TV or sports show is on, favorite TV show or their sports team is winning, they don't really care about too much else. Okay, so there is a level of complacency and apathy now in society. But the government, there's a lot of people in the government, let's just say, who do not want the status quo changed. Okay? If they were enforcing the rule of law and charges evenly, this would have already been fixed after 2008. How many bankers went to jail? There was a couple token guys, lower level Goldman Sachs salesmen who were thrown under the bus. Probably given like millions of dollars in an offshore account. I don't have any knowledge of this specifically, but this is just a guess that their families were taken care of. So the CEOs of those companies would not go to prison. So they got thrown under the bus, they got blacklisted, but they got financially taken care of for accepting some blame. Meanwhile, the CEOs are getting away with more and more fraud. Watch the documentary The China Hustle and see the role that Wall Street banks played in marketing these shitty Chinese stocks that were doing accounting fraud to American investors. The Wall Street banks actually threatened to sue Dan David for bringing them accurate, honest research, saying that these Chinese stocks that had done a reverse merger and had listed on American exchanges were frauds. They threatened to sue him if he publicly released the information and disseminated it. He went to their office to pitch them and said, well, maybe they want to learn the truth, and instead they told him to get the hell out of there, and they threatened him. Joseph Smith, about the U.S. Mint stopped delivering silver. Well, the U.S. Mint can only buy silver, to my knowledge, from U.S. silver production. So they're not allowed to source their silver, to my knowledge, from outside the U.S. And there's not a massive amount of silver production in the U.S. So I don't think this screams immediate silver shortage. I just think that this means that there's not a massive amount of silver production in the U.S. There will be silver shortages at some point, though, if we start to see the large primary silver miners or the base metal miners that produce silver as a byproduct start to either go bankrupt or announce that they're drastically cutting down their production. We have not seen that yet. But there is demand increases for silver in India. China demand is pretty strong. Industrial demand is pretty strong. So other than retail demand in the U.S. and investor demand in the Western countries in the U.S., U.S. and North America, silver demand is not totally collapsed. Silver demand is actually pretty strong. And, we'll have to see what... I focus on the supply side, so we'll have to see what happens on the supply side for silver. It's not there yet where we've seen massive cutbacks in silver production. The U.S. Mint news is not going to do anything for the silver market. The news will be if the base metal miners stop producing, cut back on their copper and base metal production, and cut back on their silver byproduct production, or if these primary silver miners, which are transitioning away from mining silver in a lot of cases, they cut back their silver production too. We're not there yet. But we are seeing rapid deterioration in the balance sheets of a lot of these primary silver miners. They are running out of ways to cut their costs. I will show that in the short video that I have the PowerPoint slides done, and I just have to do the audio and record the video and then edit that afterwards. That's over 3 hours of work, so hopefully you guys will be appreciative of that. Lorraine Weymouth. Most are asleep here in the United States too. Most are asleep in the United States here too. It's sad. I assume you're talking about the UK because I remember you saying hello from the UK. They try to shut down anything against the government who are hanging on by a thread because they couldn't run a party in a brewery. And you Brits love to drink a pint, right? Crash 845. This is a good question. Jason on Jim Poplava's podcast, he said the coast in the U.S. will become the new Rust Belt. I wouldn't call it the Rust Belt, Crash. I would call it Europe. I would call it Greece. So, there are rich people who live in Italy. There are rich people who live in Greece. Not that many middle class people. The middle class in California is being gutted very quickly now. It started off slowly, and now it's accelerating. And so California is becoming, the dichotomy between rich and poor is accelerating in California. And California should be by far the wealthiest economy in the United States. They have, they have the potential for pretty much any type of industry you can think of California has, but a lot of their politicians and regulators are blocking a lot of stuff there. So they only have like tourism, and they only have Silicon Valley, and they have Hollywood. So those are the three main ones now, but they used to have a lot more industries in California. They used to also have the defense industry, but I think a lot of those companies left. They used to have a lot of other industries as well. They still have agriculture, but they used to have oil and gas and others, and mining, and those left. The new Rust Belt. Well, California is going to be appealing, Crash, for people to retire there. So if you're a rich, affluent Chinese or out of Asia, or you're rich, affluent European, it's still cheaper to retire in Florida or Arizona or California on a relative basis than it is in most of Europe. So you've been seeing this now for over a decade, a lot of money from China, whether that's legal or illegal, because there's a lot of people who've told me that it's money laundering or stolen money or drug money from China. But there's a lot of money going into property in California from Asia, China, mostly China, and also Europe. So I wouldn't say it's exactly like the Rust Belt, because a lot of people did not want to necessarily live in a lot of the Midwestern states go there for tourism necessarily, or want to live there year round. A lot of people who have affluence want to live in California year round. So I think I don't think the Rust Belt is the most accurate comparison. I think it's more that California has a ton of wealth. Okay, there's a lot of capital there. Technology companies are moving, but there's a lot of wealth and capital in California. That is eroding though. And the middle class is leaving California. The middle class in California, especially if they don't vote Democrat, will be smartly leaving California. But I think the better comparison for California is that California will turn into like Greece or Italy. Very high tax, good for tourists, and if you don't have a lot of savings, a high net worth, it's going to be very difficult for you to make a living there and keep your head above water. Luminary wins. You nailed it, buddy. It's easy to divide and conquer the middle class. They fall for political BS on both sides when they should unite against the top 1% shenanigans. Well, you have the mainstream media, Luminary, which won't even talk about all the bad things George Soros does. So he has such deflector shields from his the people he pays with David Brock and Media Matters and Correct the Record and all these paid trolls all over social media protecting him. So they won't even talk about all the bad things George Soros has done on most of the mainstream U.S. financial media. So until we talk about, he's one of the main bad ones. He's over $18 billion going into like basically trying to drastically change the United States. Scary thought. 66 Sigma, most of the inflation is in the stock market, not just the stock market, Sigma, also in bonds, real estate, a lot of other asset classes. Even in cryptocurrencies temporarily, just not in gold and silver. Arjal, thank you for adding me to your Patreon. I appreciate it. Hey, if we had a couple dozen more like you, be in much better shape. Be able to upgrade even more of my equipment, audio equipment. Black Star 101. California is Brazil in America. California used to be better than Brazil. California used to be like the top GDP state in the United States. I'm not so sure what it is now. Probably Texas, I think, is the best. New York and Texas. New York because of Wall Street. Texas has a strong, diverse economy for now. A lot of technology companies are moving to Texas. A lot of other corporations are moving to Texas, but there's a lot of hardcore Democrats that are moving to Texas as well, and eventually in the coming years they will ruin that state with taxes and regulations as well. I hear Austin, there's a lot of good restaurants in Austin, but I hear there's tons of crazy regulations in Austin and taxes, and I'm not sure if they still did it, but Austin had Uber banned. So I have one friend who moved to Austin. He was an entrepreneur and he sold one of his companies, and I think he couldn't even get a taxi cab from the airport because there weren't any, and he was calling up all his friends, and he posted on Facebook, and Uber wasn't allowed to be at the airport in Austin, Texas. Hopefully the citizens revolted and got that changed, but I don't know, man. What I talked about this on the last live stream or two, that a lot of these hardcore Democrats, it's mostly Democrats, vote for crazy taxes and crazy rules and crazy regulations, and they vote in these crazy politicians in their state like California, New York, New Jersey, and then the taxes and all these things go up, their standard of living gets crushed, they can't pay $5,000 more per year or more in property taxes, and then of course they leave that state after they already ruined it voting in there, and then they end up moving to other states like North Carolina, South Carolina, Indiana, Colorado, and then they start to ruin those states as years progress. So inflation and taxes are going to be the new normal. It's going to be, if you have the money and you have the wherewithal and you can be mobile with your lifestyle, you can reduce your tax bill by traveling to other states, but the average person is just not going to be able to reduce their tax bill moving from state to state to state. Especially if you have a family, it's just not going to, it's not going to be able to be consistently done. Yeah, Florida. Well, Florida's still hardcore Republican, part of Florida. But yeah, the Miami area, hardcore Democrat. Florida's kind of divided. Florida's kind of like Virginia. So a lot of Virginia, at least half the state is still hardcore Republican in Virginia, but the northern Virginia, which is like 20-30 minutes outside of Washington, D.C., that's basically like another state, because over the last X number of decades, 4 or 5 decades, tons of hardcore Democrats have moved here looking for a government job. So the politics in Northern Virginia are very, very Democrat for the most part, and getting worse, by the way. And for the other part of the rest of the state of Virginia, it's not that way, at least not yet. Although in certain university cities like Charlottesville and stuff it is, but for the most of the state, it's not like that yet. Okay, guys, well, we're over an hour for now, and my throat is getting sore. I'm going to check the emails to see if those interviews can hopefully be finished up in the next day or two, and I can release them. I really do not want to redo them. They were really good content. The audio is actually good, but there was a problem with syncing up the 2 tracks from my audio and my guest's audio. So hopefully that'll get fixed, and we'll be able to release the interviews that were already did last week. Oh, excuse me, bad grammar, that were already done last week with Gordon T. Long and Victor Sperandio. And once we have this problem solved, I will book more interviews for you guys. And this is the only free podcast that gets those type of guests. There are other free podcasts that get those guests, once in a while. But I think with the diverse subjects that we're covering, and I'm not niche. Some guy called me niche. I mean, come on, guys. Covered oil and gas, value investing. A little bit, I've been adding more technology guests. Not niche. Richard Wolf, I have emailed Jim Grant a lot. He is very tough to get. I need help. If you know anyone who can help me, get Jim Grant. I actually have, I've been emailing Jim Grant. I'll give you guys, most of you guys do not know this, but for some of the guests, I literally have to email them back and forth. Sometimes with Fred Hickey, to get Fred Hickey on the program, it took me dozens of emails back and forth with him to coordinate with his schedule to get him on for an interview. He had to see my other work, finally agreed. Sometimes I have to cold email, people lots and lots of time. I think you guys don't realize all the work I have to put in to get some of these guests. Jim Grant, I email Jim Grant every 3 or 4 months, send him a polite email, send him some of the other big name, links to the other, big name guests that I've interviewed that he would know. I've sent him sample questions that he would like, that would include some of the books he's written. And still, I don't even get an email back. I will keep trying. I cannot make any guarantees. If anyone has a connection to get me Jim Grant, let me know. I have even tried to get Jim Grant on for an interview. I've spoken with his son Charlie on Twitter, and I got his email too. I tried that too, that angle. So I'm really trying to get you guys the best interview guest possible. There's a lot of effort behind the scenes that I don't really get credit for. I don't like talking about it too much. Some of you guys who have sales jobs, it's kind of, initially when I was trying to sell people to build the interview guests out for the podcast, no one had heard of me. My audience was small. It's a lot easier now to sell. I don't get turned down as much. Normally it's like, oh, I'm writing a book, or oh, I'm busy this week or next week, and check back in a week or two and we can do an interview. I don't get turned down as much now. Okay, well, my voice is getting really sore. I need to take a break. I'll speak to you guys later, and you can talk to me more in the comment section below. Everyone have a nice night. Bye.